Everyone. Welcome back to Policy for Normal People. I'm your host, Christy Amata, here again with the monthly market update with Marcus Sturdivant Sr. Hi, Marcus. Welcome back.
Hey, Christy, how are you?
Doing okay. Folks, we're a little late actually getting the September update to you, which is what this is. We're well aware that we're into the first week of October, but I'm recovering from a surgery. This is my first time really back at it, and it took us a little bit of time to get things together. So we appreciate your patience. But as I said, this is Policy for Normal People. I'm your host, Christy Amata, and this is our special monthly edition, monthly market update with Marcus Sturdivant of the ABC Squared. Marcus, happy fall. I hope that your kids are well adjusted into school and everything's going great for you. I hope the colors are as vibrant there in North Carolina where you are as they are here in Virginia. How are things?
Things are going well down here. Life's all right. The weather's changing, the fall's happening. The fall in the stock market hasn't hit yet. Maybe it's not
Yeah.
coming, but
Yeah.
the yeah.
Well, let's get into that. The fall in the stock market is something that you know does get talked about, and we're seeing some conversations about it here and there in the news, and wondering when it is going to happen or when it is going to fall, right? So September, another crazy month for markets, I think. It's fair to say. We had a rate cut by the Fed, missing a job report. We've got the government shutdown, of course. So, Marcus, what's on your mind for the September summary?
Yeah, so as far as September goes, just jumping off with the fall, there's a concept called the September effect. I don't know if it's more mindset or more actual effects. It's where the stock market generally declines in September. It'll start strong, go down towards the second part of September, and then October has generally been the weakest month in history for stock markets. But you have to think about some of the events that happened in October with the stock markets. Black Monday, 1987. These were October, so they skew the market when you look at those histories. But in general, the stock market is just churning on, churning on. One reason is the unfortunate government shutdown that we're going through right now. The stock market in general in history, when you have a government shutdown, as long as it's not a long duration stop shutdown, the stock market tends to do better. So even with the Fed's rate cuts, another boost to an economy that people think could use the rate cuts as far as housing market goes. You have we don't have the data coming in as we talked about with the government shutdown. So we're lacking some of the data. People are turning to other sources for data. So they're turning to the private markets like the ADP. The Chicago Fed office has a tracking tool that mixes individual data with private data. I think they use some of the state data and they come out with figures. So their figure would have been, it's not official, but around 4.3% unemployment. So that's generally around where we've been trending. The inflation number that we didn't get, uh, or that we may not get due to the government shutdown, that'll be a little more tricky to track from the private market. But we feel inflation as consumers every day.
Mhm. Yeah. Would you say that the inflation we're feeling is the same as, say, a couple months ago, where it was maybe more cost push oriented to specific types of products, depending upon what was being specifically hit by tariffs versus maybe longer term effects, or the overall economy? Because I know that a lot of economists have agreements and disagreements about what to call inflation or when to say we're in an inflationary period versus a few products or a few services being affected versus in converse to the whole economy, for instance. So what's the general consensus, if there is one, on are we in an official overall economic inflationary period?
I think so. Inflationary pressures are definitely higher right now. Inflation has been felt differently this time because inflation, I think, is hitting different sectors. It's not hitting everything at once. I
Mhm.
mean, generally prices are going up slowly but surely, but like certain sectors are feeling it more. And it was rolling maybe with the impacts of tariffs, and certain sectors and tariffs impact was hit harder as it rolled in to be figured out by the corporations. As I mentioned before, corporations they'll figure it out. They're going to pass these tariffs off either partially to themselves partially to the country they're receiving them from, and then partially to the consumer. So it's just a matter of the mix. Uh, to begin, the companies and the producers seem to be absorbing most of the tariffs. So the inflation has seemed to be rising slower or staying consistent, but eventually that'll have to be passed on more to the consumers. As shareholders and stockholders want to see more margins in their stock prices. That's just the way of the world with investing in corporations.
So you're saying that there's been some pass on to consumers, but we're not seeing quite the hit that we might possibly in the future.
Correct. We could see a higher hit with tariffs, and that's also one of the things that the Fed is talking about as far as like the balancing out. They're not sure if this is a one-time price shock from the tariffs or if this will be continued pressure from the tariffs. Without having data coming in right now, you also have cloudy and foggy views as to whether this economy is growing. Because if the economy is growing really fast, you don't want to cut interest rates in growing economies. That's going to create more inflation, right?
Yeah.
You don't want it to grow rampantly uncontrolled.
Mhm.
So all that being said, uh, the inflation in the housing market, if you look there, so we're talking about sector wise, look at the housing market. And I know I feel good about the housing market coming into the second half, but just uh, earlier today, I saw like the 15-year is under 6%. The 30-year is getting closer to 6%. I think at the beginning of the year, the 30-year was 7.4, 7.14, and
Yeah.
right now it's
It's-
pretty much 1% below that.
mm.
So housing markets and mortgage rates take a long time for those type of inflations to come down, but directionally, inflation is coming down. So it's in different sectors where it's rising and where it's falling.
Yeah, and I want to come back to that concept about things, certain things taking longer than others to catch up and how they can influence one another, policy versus the financial sector, that kind of thing. I want to come back to that in a bit. So you mentioned unemployment, and I believe you had said earlier in the segment that it's kind of been holding steady, but it was what was the percent again? 4 point something?
According to the Fed's, Chicago Fed's system that they run, it's not the official one because they don't get the official data. Like I said, it's a compilation of the ADP, like private data information and some state information, but it's at like 4.3.
Okay, okay. And I know on I think it was Moody's, couple places, Squawk Box, just the general places that a lot of people see financial news, like myself, just quick in the morning. But the uh, the feeling was is that companies, and you mentioned this too, they're kind of waiting to see what happens a lot, um, so that they're absorbing the tariffs for now in some cases, but they're also not hiring as far as we can tell. So we're seeing that. What is the change if you remember the change rate from say let's say the beginning of this year roughly to now in the unemployment number?
The number has been wanky, or that's not really a good word to say, but it's been out of sorts, so you just got to look more at the percentage. It's been right around 4.2, 4.5. It's been in that range, 4 to 4.5 the whole year, pretty much. The thing that you need to look for with the unemployment, as these numbers say the same, is the duration of unemployment. So like the JOLTS number, jobs over lost turnovers, you need to see how long people are staying unemployed because okay, so we have inflation. If we have inflation, even if inflation continues to grow, if you have wage growth and growing GDP, they can kind of combat each other, right? But when people start losing their jobs and then people start losing their jobs for long durations, that's when the economy could falter or buckle. Like that, not having jobs and not having money to spend is when the economy really, really would start to feel the pressure. Inflation is bad. Right now, we're more towards I hate to say it, maybe stagflationary situation where we're just kind of stuck with this inflation, stuck where we are with the jobs market. But if this duration continues to extend in unemployment or people who aren't even going back to work or the underemployed, people who are, doing jobs that they're not technically trained for or qualified for, those type of things start to show cracks in the economy.
Yeah, yeah. It's all kind of interesting. I think how this is all going to play out, and certainly, um, you feel like sometimes that news reporting on it, there's always this it's fast paced, and it's the same thing with the change and turnover with policy making and all, the politicians or people, getting elected office and then new people coming in. And so I wanted to kind of return to sort of the pace of things and your comment about how long it can take for certain things in the market to take shape versus others, and how those are influenced by other factors that are moving faster than, say, the financial world. I got a question for you, and it was just something that was on my mind last night because I was reading an article in the Time magazine. And folks, if you're interested in taking a look at it, it was by the author Justin Warland, Shifting Winds. So, this article was about clean energy and the clean energy transition. And I got to thinking about that we were going to do this, have this conversation today, Marcus, about the overall market. And of course, clean energy, a lot of companies, big companies, as well as banks, large banks have been investing in clean energy for some time now. And of course, they were hoping to take advantage of some of the opportunities that would have been in the previous bills from the Biden administration, the infrastructure bill, and so forth, some of which are there, some are going to phase out, others are going to be completely eliminated, unfortunately, where clean energy is concerned in particular. And so, reading this article, it seems, according to the article, that large banks like JP Morgan, they met recently with some other big wigs in Scottsdale, Arizona, and they're discussing a dilemma that they're in. And if you just listen to the political reporting, you would think that clean energy transition is dead, that it just died, it's dead on arrival with the incoming of the Trump administration and Republican control of all three branches. But I've often thought that, and this article alludes to it as well, that the mistake we make about not only how we talk about clean energy transition, but also how we invest in it and how the market behaves, that it's never a zero sum on either side. It's never all one, it's not all fossil, it's not all clean energy. Everything just transitions and changes at the exact moment that you want it to, regardless of what side of a person is on with that politically, which of course we don't deal with that here on this podcast. But in terms of financial markets, one of the things that stuck out to me in the article was that companies like JP Morgan, big, who are investing both in fossils but also have been made significant investments in clean energy, they get criticized from both political sides of the aisle for that. But they've really got a dilemma of they are invested in clean energy and have been for some time. And so even if politics changes rapidly, there's no guarantee that the financial sector can make those kind of whiplash changes, nor might it be in their best interest. I'm just curious what you think about all that. What do you see as evidence maybe in the markets of these prior commitments to clean energy goals, even if it's not an emissions specific goal, but just that they're going to continue working on transitioning gradually from fossils to cleaner energy. What do you see happening in terms of what they may do in the markets, or is that another wait and see kind of scenario?
Um, yeah, so I think you actually pointed out a lot of good points in there. Actually, how everyone's balanced on both sides when it comes to investing in clean energy versus fossil fuel.
Hmm.
Go back to the 70s when people couldn't get gas to the 80s where we started, we were going to make sure we had gas with Reagan, Bush, we had gas. Then Al Gore was running for president. He was one of the first people to really push climate change, those type of things. So that administration, well, Clinton was president, Gore was Clinton's vice president, but that was one of his initiatives when he did run for president. So that started a conversation, back, and then Bush, Iraq, all these things. So it's been a constant shift, Obama, Trump, Biden. So let's just go from the Biden to current, right? Because that was a big shift with the EV credits. We had legislation pushing towards more EV credits for people to purchase EVs, for you
Yeah.
or dealers to sell EVs. They're
But
setting
even
up.
he kept some of the initiatives that the first Trump administration had because we ended up with the war in Ukraine. So we were always fighting this current energy demand, which right now, is still fueled a lot with fossils. And even clean energy relies on, electric batteries rely on the sourcing and extracting of fossils. So Yeah, I'm always fascinated by the how the conversation maybe doesn't sometimes meet reality and how the markets get maybe caught in the middle. Would you say they get caught in the middle?
The markets are caught in the middle, but the markets move fast. These banks are moving slower. They're going to allocate
Oh,
their funds for, I guess this last administration, it was clean energy. They just moved some of those funds more towards the fossil fuels because even when you're using like nuclear energy, you need like coal and fossil fuels to run the facilities that's going to create that until they figure out a way with the natural gas how to do those things. So yeah, banks are investing in those type of things on both sides, playing both sides field because they know the political environment is going to change. It always changes.
mm,
This stuff isn't in law. It's set up where it can be changed every 4 years depending on the administration, right? Depending on the legislation coming out of the office, the temperament of the country. So these companies make huge investments and they make long-term investments. So they can't shift on a dime just to say, all right, we're done with this facility, we're done with that facility. Because the
back.
people who are building these actual facilities, so JP Morgans of the world are lending money to these companies to build these construction companies who have to hire workers and build materials. But if you just take all of that funding away, you can't just outfit a building that's been built for one type of energy into another type of energy. Just like it's not as easy as people think it is. It's just
Yeah.
not that easy to retool a facility. So yeah, the money's in there, the money's moving. I think it's just more of a shift to where the money's actually going and what the actual like bankers and investors are talking about. Because Chevron, ExxonMobil, I heard those CEOs speaking just about how, yeah, they thought maybe some of this fossil fuel stuff was fossil fuels were obviously good for them. Everything like some of this clean energy stuff, they didn't really know, but they just kind of went along with the administration because it's just easier not to fight the administration when they know they're going to be there longer.
Yeah, yeah, and I think we're in a um, an era where there's a little bit more spotlight on banks and companies, just by the nature of communications, between the government and those companies. That's a little bit more public facing maybe than we're used to seeing sometimes in the past. So that can put pressure on what their decisions are too. But it was an interesting article, and I just was curious what your thoughts were on it because overall the article was alluded, talking about how the banks in particular, but even large companies who are receiving those funds and investments, trying to work through a dilemma of they're really the despite what's happening politically um, and even in policy. I think we have seen enough public interest, enough change over the last 20, 30 years, especially um, towards a climate conscious society in a way that isn't easily reversed by one or two policies and as you pointed out every 4 years there's another change that's possibly coming, so it will be no pun intended, interesting to see how companies, banks, and the market in general weather that storm in that topic. So we'll wrap it up, but just wanted to give you a moment to offer any other final thoughts, especially what are any implications or thoughts you have that are helpful to Main Street relative to how you try to help them meet Wall Street.
Perfect, right? Yeah. So helping Main Street meet Wall Street. I don't think I even gave you an example from the last question. So let me give you a quick one with that. As
Yeah.
far as like the climate change and the shift in policy, just take Tesla for example. Their stock price has been surging. The EV credits are expiring at the end of the year, or before the end of the year maybe. So people are pushing to buy the EVs if they want to have them now with those tax credits, which were reduced earlier this year. Anyway, but as far as what I want Main Street to know, Main Street to meet Wall Street. Just uh, information is key. There's a lot of information out there. Be careful with the information you take in. I don't want to say fact check because I know it's like a bad word now, but like double check what you're looking in. If you're going to invest in something, please invest in something that you understand. Don't go out here and invest in something that you just hear or think about or just see on a social media stream. And the market trees don't grow to the sky. So if you see a market correction or a market dip, don't panic. Don't go sell everything because if you're investing in stocks or bonds or anything like that, it's only a loss if you sell. Otherwise, it's just a paper loss. If you can weather the storm, history shows that it'll come back up. But we're in the middle of a bull market right now that could run for years or it could run for a month. We'll just see how it goes, depending on the political environment and depending on if AI is just, if AI came out and was just Obviously, I don't think it is a flash in the pan. You would see the market go crazy.
Well,
Like
this
in
is
the
this is
wrong
what
way.
the ABC squared helps people do. This is what you do, right? You help people weather these storms and understand better what their choices are. So, folks, check it out, the ABC squared. And I think you can definitely find Marcus on LinkedIn. And what's your website address again? Is it abcsquared.com?
Right? That's my website and have a YouTube channel I just started. So some videos on there, offer some financial literacy and
Fantastic. Great.
stuff with you and I on there, Christy. So
Yeah, absolutely. Yeah. And we do this every month, folks. Thanks for joining us. Thanks for listening in or watching, depending upon where you get your podcasts and how. This is Policy for Normal People with Christy Amata and Marcus Sturdivant Sr. of the ABC Squared for our monthly September market update. We'll see you again at the end of October for this same type of segment. Thanks a lot, Marcus. Enjoy the month.
thanks, Christy. I'll
See
see you
y'all.
next.
Bye bye now.
Bye bye.
Okay, welcome back to another episode, a special episode actually, of Policy for Normal People. I'm your host, Christy Amata. This show is sponsored by my consulting firm, Amata Development Services LLC. You can check it out at amatadevservices.com. That's amatadevservices.com. I'm a full service and flexible marketing communications and fundraising firm for small businesses and serving nonprofit organizations nationwide. I am welcoming back today, and it's my great pleasure to do so, Marcus Sturdivant Sr. of the ABC Squared. Marcus provides market analysis and financial services to help Main Street meet Wall Street. What a great tagline, as I've said in the past. Marcus, welcome back.
Hey, thanks, Christy. Excited to be back on here with you again. It's always a great time when we get to sit down and just chat for a little while.
Absolutely, absolutely. And folks, if you've listened to previous podcasts, this is a little different. We're experimenting, Marcus and I, with what we're going to call the monthly market moment with Marcus Sturdivant. So at the end of each month, we're doing a very quick, kind of 15 to 20-minute episode that just covers what's been happening in the market. And then I'll tie in a policy question somewhere in there, since this is policy for normal people, after all. So let's get started. Marcus, gee, there's nothing happening in the market at all right now, right? Like, I mean, it's super calm, cool waters. Yeah.
Yeah, right. I know.
Not entirely, right? Yeah. So, could you give us a quick overview for the month of August? Just hit some highlights about what you've been seeing in your market observations, what's going on. We know, of course, that as we speak, I think the hearing for Lisa Cook's firing is taking place and what may happen there, an injunction or otherwise. So, lots of stuff going on. Folks, obviously, since we're doing this monthly, we're not trying to give you, real-time information or even suggestions or anything about the market. We're just providing a little bit of educational catch-up information. If you're a person like me who is trying to follow a lot of things at the same time, not to mention it's time to get back to school for a lot of families with their kids. So we're just trying to provide a little bit of educational information and updates that removes the politics, as is standard for this show, and just gets into what the pragmatic stuff is. So I'm going to turn it over to you, Marcus, to give us a little bit of some roundup for month of August. What have you got?
Gotcha. Yeah. So for the month of August, like you said, people are generally, on vacation. People are getting ready to go back to school. So as far as like investing, that's usually a light month for the stock market. Usually August, September, they have what you call the fall. This August actually has been a little bit different. It's been boosted by some data that has led the markets to believe that we'll be getting a rate cut next month at the September Fed, this next month's meeting of the Federal Office of Monetary Committee, the Fed meeting in September. So they're thinking we're getting a 25% base cut just based on Chairman Powell's speech last week at Jackson Hole. He just came out far more dovish than people expected. I think the data is showing that the uh, spending and uh, government is slowing down. Well, maybe not the spending in government, but the overall GDP is slowing down. So growth is slowing down. We just got revised numbers that revised some of the numbers up, but it's still below the pace that we were expecting for GDP. So with the news um, from Jackson Hole, and then some companies just some companies just producing some great earnings reports. The stock market actually was up in August. It's actually been up for the month, led by like small caps. Small caps tend to work better with rate cuts, but the market's been up. It's seeing what it wants to see right now. It's in a Goldilocks area as far as like the stock market. The housing market seems to be waiting on rate cuts starts. That's a bumpy thing. I think the housing market will look to improve. Will still improve in the second half. We saw some improvement in those stocks as well. That area of the market just with people anticipating rate cuts coming down, hoping that that will in turn lower the mortgage rates. And then, as far as like you said, with the Federal Reserve, it's been a big month just testing the limits of what exactly is Fed independence, what executive powers the actual branch of the executive office possesses, and then of course it all ends up in a judicial setting to see. So we're seeing the branches of government all work together, I guess, or maybe against each other, depending on your view. So the market's been churning. The stock market that's been going up, like without the news, it makes sense just because, like I said, companies are reporting good earnings. Bank of America saying consumers are still spending. Unemployment, that number's been pretty consistent. Like we're pretty much at full employment. The difference with the unemployment is the duration just continues to grow. So if you lose your job, you may be unemployed longer versus before. So
Yeah,
that's
I've definitely I can definitely speak to that. You know, the amount of people that I've met. Of course, I live in the DMV, you know, the DC, Maryland, Virginia, Northern Virginia area. So a lot of federal workers here, so lots of job loss. I know quite a few people, friends, and so forth that have unfortunately been a victim of that. And that of course is occurring, you know, throughout the country and other industries too. What do you see in terms of hiring relative to the market changes and fluctuations that are going on? Is hiring slowing down? Is it kind of stabilized, or do you see companies kind of just waiting to invest in more workers versus maybe you know, technology or innovation? What do you see going on there? Is it just too early to know how that's going to land?
So it's all mixed in, right? So you have companies that were on hold waiting to see where we would end up with tariffs, which is still a process just to see how tariffs are going to impact companies' cost, impact companies' revenue. We just got the big beautiful bill, one big beautiful bill, however you want to summarize it, passed in July. So people are still working through the effects of that. That really released some capital spending as far as businesses go. Uh, so yeah, companies, and as far as the actual unemployment number, like I said, that number may go up or it may go down, but it's pretty much in that 4.2, 4.5 range is where it's been pretty much around the same time. So percentage of people employed pretty much stay the same. Like I said, we're pretty much fully employed. But once you lose a job, to your point, companies are not as quick to hire people. Part of that could be some of the murkiness in the data, some of the murkiness in the rate cuts, some of the murkiness in tariffs and spending, and some of it could just be AI efficiencies increasing the actual productivity of people and requiring companies to hire less workers. You see a lot of companies, big companies now, Microsoft and other companies, some of these snowflake companies like these, they're just coming out saying they're not hiring as many people to do tasks anymore as AI has taken over some of those.
Yeah, interesting that you bring that up with AI, Marcus. I am in the myself in the process of following some courses to get certified in corporate communications, to take it sort of to that level, because I've worked with nonprofits more so so far. But I took a course just now, just finished a really interesting course on generative AI for written communication, and a lot of concerns came up among my peers in that class. This was with Cornell University, great class, um, about what kind of jobs AI is going to replace. And the opinion of the professor seemed to be, and he's an engineer, been involved with this kind of technology for a long time, so he's watching the trends for quite a long period. He said definitely it's going to affect healthcare, and it's going to affect computer tech engineering jobs. You know, so some of the STEM jobs, depending upon what you actually do in terms of the function that you perform. So it's really interesting. I think there's a mix of fear and excitement and optimism out there all at once about it. And I know I use it a lot in my job. Do you use AI in your job much?
I use AI sometimes maybe just for like editing purposes. I don't particularly use it that deep for research, just with the hallucinations that AI will give you. But yeah, AI definitely can help you with like some administrative tasks as far as that goes. So I
Yeah.
definitely uh, use AI in those capacities. And people, as far as it goes with AI, like whether you love it, hate it, you probably should dig in and try to understand it, at least understand how it works, because it's that technology is coming. People worry about, and I know it's not a one-for-one comparison, but you think back with technological advances throughout history, right? So you've had, just think back in the 90s, 80s, 90s when they came out with ATMs. Everyone thought all tellers were going to lose their
I
jobs,
remember that.
right?
Yeah.
But what you
Big deal.
found is tellers didn't particularly lose their jobs. They were just found other places to work in the bank, right? They just found other efficiencies or different ways to use them. So I kind of look at it more that way with AI. Like, yes, people are going to lose their jobs, but it will become more efficient. People will become more efficient in the AIs and the game in AI, and the gain should, in theory, should outweigh the cost. And we
Yeah.
are getting to a point where people are wanting to see all this money we've been investing in these AI companies, they're wanting to see returns from it. That's starting to come up in 26, 27 for sure.
Yeah, I expect they are. Yeah, because quite a bit of capital has been directed towards that investment, and I'm sure that people are anxious to see a return. Very interesting stuff. We'll keep an eye on it for sure. Hit a little bit, if you would, on just your thoughts about the Lisa Cook situation. You know, obviously we don't want to focus on politics in this show. You know what the political opinions are around it, but you know, just are there any pragmatic implications from that that you see in terms of affecting market decisions or maybe not?
Gotcha. So yeah, let me preference this with saying I'm not a legal expert, and I think even the legal experts are saying this is kind of like unprecedented territory as far as where
Yeah,
we have
that's
right now. You know, she's being fired. The court hearing is happening right now to see whether they'll have an injunction or a stay to allow her to go to work. Or I think right now her official status is that she's been traveling for work, so they don't really know if she's been in the building or if she's been working for the Fed. You know, in her capacity, she's obviously filed suit against the Trump administration, also against the Federal Reserve Board. She filed that in an
mm,
effort to, I think, protect the board from any actions that may come from the executive branch if they were not to enforce some of the things that President Trump has uh, inquired with this firing. So as far as it goes, like they haven't, I don't think anyone's produced any evidence yet. I don't think she's formally been charged yet. So we can't get too far ahead of like what it really is. But and some of this stuff predates her time as a Federal Reserve official, right? So
mhm.
let's say, and this isn't unprecedented in the fact that Federal Reserve officials have had incidents before with different things, and they usually just kind of resign. But I think the way this is set up is this is a different case just to see the executive power versus what can actually be done with the federal governance. What is actually firing for cause, right? That's the big thing. What is the cause? Are allegations cause? But until like the actual charges have been filed or she's been found guilty, they're just allegations, correct? So could you just fire anyone for allegations? Is this a bigger play towards Chairman Powell? On a larger implication, globally, people look for the independence of the Fed as the American dollar is the global currency, right? So if they look and see that perhaps the Fed can be influenced by another branch of government, is truly not independent, that could that would definitely decrease some of our faith within the international community as far as our stability. And I mean, people have seen what happened when countries are when they allow their monetary policy to be pushed by governments who usually want lower interest rates, right? Because they're paying back their debt with lower interest rates. Things
Sure,
are
sure,
their
yeah.
housing market's lower interest rate, but lower interest rates cuts both ways. So the independence of the Fed at the end of the day is very important. I can't speak to whether Governor Cook is guilty, innocent. I don't think Governor Cook's even been charged yet. So like right now we're sitting here and they're having the hearing right now. So we don't know. So
But it's definitely a educational opportunity moment, isn't it, to just for everyone to kind of pay attention to just what it means in terms of the relationship between, governance and finance, in the country, and how the government interplays and intersects at different times in different ways with, the financial policies that come down. And that kind of leads us into sort of somewhat policy related question I was going to ask, sort of the one question, I'm going to do one question on these monthly calls. Um, for our Main Street folks, and that includes me, what is a basic definition of the difference between monetary policy and fiscal policy? When you hear both of those, and what are each of those, and how do they differ?
All right. Yeah, that's a good question. Right. So, uh, monetary policy usually affects the supply of money, right? So, and that's done from the Federal Office of Monetary Committee or the Board of Governors, Federal Board of Governors. There are different banks, central banks all around the country make one big central bank, right? They control money supply, interest rates. Their main focus is inflation and jobs, right? They want to make sure that we have an optimal inflation rate and full employment. So those are their tools. That's what they focus on, monetary policy, right? Fiscal policy on the other side is more from the uh, Congress, the executive branch, the legislative side of it. This Treasury Secretary Bessent, people of those means. So think about the big beautiful bill. That was fiscal policy. So it goes in involving tax cuts or how we will go about um, not interest rates, but like tax cuts or extended tax cuts, deductions, things of that sort. That's more going to be towards your fiscal policy. How we're paying the debt is also fiscal policy, right? How much the debt's going to be is fiscal policy, right? So that's another thing. Like as you hear, in an ideal world, the fiscal policy works independently of monetary policy, but they all work together in the sense that if the deficit's out of control, hopefully the rates that we're paying back on this money, which is set by the monetary policy, uh, the interest rates, hopefully they're optimal for us to be able to service this debt while not increasing the debt, but not so low that we're just going to let inflation run wild, let spending go out of control. So it's a really delicate walk. But just generally think with monetary policy, think money supply, how much you have. Fiscal policy, think federal, think legislative, think policy, or think legislation. Does that answer your question?
Yeah, no, it absolutely does. It absolutely does. And I've done a good bit of self-education on those two as well. I've been into a big book by Alan Binder, or Blinder, I think it is, who was a former I think Fed official at some time, and economics professor and all. And I always find it really interesting how economists talk about each of those types of policies versus, say, someone in the more political, analytical media or something like that can often be very different in terms of how they evaluate what is good for an economy, what's not, and where we fall in between. But I think it's definitely, as complex as those two are. I think it's important for people to understand, and I know I want to continue to understand it better, that they do impact each other, and the decision's kind of a very much a action reaction kind of situation, right?
Right. I mean, think about with fiscal policy, they in the original Tax Cut Job Act of 2017, they lowered the corporate tax rate, right? So that corporations weren't paying as much for taxes. That should increase the amount of money they have to spend for hiring, right? They made that permanent. So now you would think that even if on the other side, the monetary policy was to lower interest rates to increase more money for businesses to hire people. So that's how they could also work together. Even if the interest rates were to go up, you would go up a little bit, which takes time for that to flow through to businesses. You would still have the lower corporate tax rate. You see these lower deductions and tax rates on the fiscal policy that should stimulate small businesses to spend. And if they're stimulated to spend, the monetary policy on that side is they're going to need to get money from banks at hopefully lower interest rates.
Yeah, and good point about the lagging indicators, right? I mean, the impact factors, they take a while to take hold, both in what you just described and then also with inflation. It takes a while. There may be some initial cost push inflation in various areas that's not relevant to the whole economy. And I think we've seen some of that. So it's still kind of early, I think, to really tell what's going to happen like after about 2 to 3 years as these policies are firmly in place and businesses have had a time to adjust and things. Would you agree that we'll have a better view of what the long term may look like?
Oh yeah, we're in it right now. We're in the middle of it. We can't see all the stuff around us, like how this is all going to play out. People are
Yeah,
basing things on their projections, but it's really unprecedented the things that are happening in our economy right now and the way they're happening. Just different type of with the whole global trade rebalancing, the whole another thing that we have to think about with monetary policy and fiscal policy is immigration, right? And the job market. So we have fiscal policy that's becoming more or legislation that's more restrictive on immigration. Hence, it's going to lower the amount of people who are able to come into the workforce because a lot of the workforce has been driven by immigration, legal or illegal. That's a whole nother topic, right?
sure,
So
sure.
companies were slow to hire in that sense as well because they didn't want to necessarily hire someone who, could just be picked up from the job.
Yeah. But would it also, is there also a potential opportunity for native born and existing immigrants here to pick up some of those jobs where there's less competition with immigration? Is it kind of a double-edged sword that way?
Right. And that's the kind of stuff. Yes, it's definitely an opportunity for anyone to, for other people to step into those voids. Maybe there are jobs they want, maybe there are jobs they don't want. Uh, I don't know. It depends on the visa, depends on the job.
I think it's going to have a more of an impact perhaps with your higher paid jobs like the H-1B types where you're looking at STEM jobs because I know there's been fierce competition between the H-1B immigrant that's newly arrived or sponsored by their employer versus the native born American or green card holder, for example, permanent immigrant here legally in the United States that is maybe graduating from our colleges and universities, especially in STEM jobs. I know it's really affected them, and it'd be interesting to see if maybe there's a balancing act that happens there. But policy certainly is reshaping that. So it'll be interesting to see how that lands. Again, it'll take some time to really see. I can appreciate what you're saying too, though. The lower paid um, labor jobs, agricultural, dairy, meat packing, that kind of thing. Um, as those numbers decrease with immigration, it'll be interesting to see whether or not the agricultural industry will decide to mechanize where they maybe could have done that a long time ago, but still relied on the cheap labor, or for areas where maybe that's not possible. Maybe there'll be some kind of balance struck between do we need immigrants to do that versus is it really true that Americans won't do the jobs if you pay a better wage and you provide security, safety, and benefits, which unfortunately those kind of things don't get offered to illegal immigrants or illegal aliens. So
Right. Or will those jobs just fade away like with the printing press?
exactly, exactly. I
Or
had a
even
great
more,
grandfather who was a telegraph operator. You're not going to find that anymore.
right? Or telephone operators, like the literal operators who would move the
Oh
line,
yeah, yeah, yeah.
or even sticking to agriculture, the cotton gin, right? That took a
There you
lot
go.
with like industrial revolution. And
For
then as
sure.
far as like the gross number of the people in the employment number. So that's what makes the Federal Reserve's job even more fluid because yeah, how many of those low volume, low earning income workers are out of the data that were immigrants, that were not immigrants, how much of that is being filled? It's just, yeah. So to answer your original question, this will be a case study for people some years from now. This time, just think about from COVID, that's going to be one. And then like from when we've come in, I think both Trump administrations will be, and obviously Biden's administration in the middle of it too. These things will be case studies just in history, like the way the government's now industrializing. Government's always industrialized some things, but like just stepping into Intel and taking a stake in Intel, 10% stake in Intel for money from the CHIPS Act. This economy's flipping, the way government collects income now is changing. So it's just a fluid thing. Excited to be able to do this every month with you because
Yeah, you
go
too.
for an hour
I
every
learned
time.
so much from you, and I hope that our listeners appreciate that and enjoy it too. And that does bring us to the end of our time. We may have actually appropriated just a few more extra minutes than 15, but that's okay. Great stuff, Marcus. Thanks for that overview. And folks, if you're enjoying the show, we hope you are. We hope you get some benefit from it. I know I do. That's the whole point of why I started it, bringing on experts like Marcus who can talk to us about the various policy related issues and market. So thanks, Marcus. I'll look forward to seeing you again to do a roundup next month. And folks, do visit him at LinkedIn. The ABC Squared is the name of his business. Mine again is Amada Development Services, amadadevservices.com. Visit me there if you need any marketing communications or funding support. Be happy to help. Enjoy the Labor Day weekend coming up, everyone, and we'll see you next month. Have a good one, Marcus.
Thanks. You too, Christy. See y'all next month.
Take care.